Good morning, traders. Welcome to Trade the Structure. Just enjoying a new coffee for the morning. We're just coming into the Asian market session Monday morning, Sydney time. It's about 8:40, so just before 9 o'clock, before the major markets kick off in the Asian session. Big session on Friday, so a bit of a meltdown in the US, as we know. Everything sort of collapsed in the US, basically right from the open of the bell about 11:30 p.m. Sydney time on Friday night. Basically started sinking. So bit of concern around. We've got FOMC to this week. I think it's Thursday, which is expected to raise rates. We've got RBA on Tuesday, tomorrow afternoon. They're expected to raise rates. So there's a bit going around, and a bit of risk off. I think it was Friday night. Amazon come out and they didn't do too well. They got hit, and there's a few others that got hit. So in more of just a risk off move, what I see ahead of what's happening this week. So it's a big week of reporting, and like I said, FOMC and RBA and other rate concerning issues. So that's probably what's going to weigh on the market this week. I wouldn't expect us to bet too out of hand because we're going to come into RBA tomorrow. So considering it was a very negative session on Friday in the US, and we're getting what you're going to be concerned about these bigger days. It's a second 900-point day in the space of a week that we've had in the US, down days. So the days are getting bigger to the downside, which is more of, conducive that people are taking some risk off the table as we get into that closer to that rate rising cycle, the start of the rate rising cycle, which is expected on Thursday in the US. I think everyone's going to be careful at the moment, with the bigger days, more swings to the downside. Doesn't mean things are going to get out of hand on the downside, but as we know, we had a really, really good bull run. Things have got overstretched on the upside. I mean, there's really only been one place for yield for the last, I guess, months and months, even years, has been into equity markets. Okay, with bond prices, giving next to no yields. Now that we're turning into bond prices starting to, yields starting to lift with a rate rising cycle, they're starting to become more attractive for major funds, major institutions, and things, which might take some heat out of the share market. Now, if it does take some heat out, or we just lack more buying into the share market when they're overcooked, prices are pretty much overvalued, you'd think, at the moment, and they still are. It could trigger a bit of a sell-off into equities markets pretty much across the globe as inflation continues to persist. All right, so we're looking at this is the ASX, or the SPY 200, only on the 5-minute chart. So that was the day session, sort of chopped around, held up okay, pushed up into the close, and then that was a high. Okay, so that was pretty much the high, popped up in the start of European session, just into the 4:30 close, actually, I think, and European session, there you go, 10 o'clock, actually gapped down a bit, sort of hovered around. It was more range band action. We had a bit of a pushback up to these highs into the start of the US session, and then that was when pretty much sold off. So the market was trying to hold up. They were trying to hold it up there, up near the highs, and then basically you got this little double top in here, fail, RTF, and then you got the shoulders to work into on the short side, and that pretty much pushed through to 73.52 and down to 73.13 on the close. So it'd be interesting to see whether we have a bit of a flush higher, dragging some buyers to sell them back out, or whether we start to hold this level at 73.13 and work our way back up again. And like I said, I would be surprised if we start to grind back up. I mean, funnier things have happened, but I would be surprised if that kind of action pushes all the way back up again, back above 73.52, considering the RBA is expected to raise rates tomorrow. Now, if they don't, that's a different thing altogether. But I think that maybe if you want to be a new buyer into the market, you're looking at buck, you're probably better off to wait till tomorrow. Okay, that's what I would expect anyway. Any major funds or anything waiting, to put some major risk back into the market tomorrow after the rate rise to see what the market does. All right, the ASX 200, this is a key level around here, 73.36. It's the same sort of thing. We sort of hover around this 74.32 zone here. It's retesting from below, held that, pushing back into this level. So whether we bounce off here, get some sellers to press it down and through, so more of a risk-off tone coming to RBA tomorrow, or whether we just sort of chop around there and we do some, some work to the downside in the open tomorrow. Okay, so I think it's going to be a struggle on the open anyway. Okay, after what happened the Friday night coming to the close. So over to the Asian markets now. This was a massive run higher on the Hang Seng. I managed to get some longs on, but I left so much on the table. It was just, you've got to beat yourself up sometimes, but it was a good trade. Anyway, it's just that last part that I should have left on and let it run, and it really would have made at least another 150 points before you sort of got some sort of pullback, but may have squeezed me out. It kept going harder. So on the index itself, that was breaking of a major level. Okay, that 2280. This is on the CFD pricing, but that matched off to a good resistance zone that had touched on quite a few times on the underlying index. Okay, after a massive sell-off, you can see that there has been a big sell-off over a period of weeks, days to weeks. Big sell-off, and it started to find a bit of a base. This was either going to be a lower high pressing down, or it was going to hold, and we're going to break through off these higher levels, and which it did. And it just took out a lot of stops there. There would have been a lot of stops jammed in above that level, and then that was enough to really push it up to the next level, which it jammed straight through as well, and flushed into a key level at 21,040. So for me, because it runs so hard and because of what we saw on Friday night in the US, it may be a bit of nervousness. Anyone's buying up on that level is probably trapped up here. And if the market starts to open weaker, they could be flushed out of the action. So it'll be interesting to see if we get a bit of a flush in the open, a bit of a bounce back to work off higher lows, and see if we can work back up to that 21,040, or whether we sort of flush higher on the open, hold some lower levels, and then so to work on these buys that bought it up through that 2280 level. Okay, and see if we can get that lower high work its way back down again, just to squeeze out some of those bulls. All right, into the Nikkei. Now that's starting to open a bit weaker. I would expect it to test in the 26,590. I'll be looking to see. I thought we may have flushed higher on the open, but it looks like we're looking to press into 26,590. But that is prior to the futures market open. That's just the CFD pricing. So we'll have to wait and see. It could just gap down here and we grind all the way back up, flush this level, and then roll over. Okay, so it has found some selling in the US session, whereas actually the Hang Seng, that held up relatively okay. I think it was just that sort of excitement from that break of those couple of levels and the 400-point run higher. So Nikkei, a big move down, had a bit of a bounce. We've got a lower high coming into play. So if that lower high is going to hold, I would expect some sort of shorter term lower highs to come into play around say 26, 910, or maybe just above that or whatever, but something to work some shorts into. Okay, over to the US market. This is the Dow. You can see that was the open. That basically one green candle popped up on the open and then fell over. Okay, so it is showing some weakness, and the way we pressured down through that level 33,268. Now we've extended that before, and then got a high low, worked up, extended it, worked up, held, popped up before we got that smash down again on Friday night. Now it is coming up to some longer term support. Okay, that's sort of more of your dynamic support. Whether we can hold that, I would expect we could so kind of maybe flush a bit lower. I would expect some sort of grind in the 33,268 or that zone through there before we get some sort of lower highs. I think some continuation on the downside. Now, if that starts to hold, you want to see it pressure in one foul swoop back above that level. Okay, hold, then retest maybe a higher low. Okay, but for now, I'm sort of biased that the way it's jammed through that level quite strongly. I'm biased more of sort of a bit of a retest of that hold. Okay, US tech, the Nasdaq. So Nasdaq's copping a bit of a hammering because that's where all the love's been over the last months and years into tech. Now that's unwinding a bit now as we've seen that risk-off move, and we are getting off these highs some good moves down. If we just go to I just want to go to a longer time frame. We'll look at the 4-hourly just to see what that's showing. Get rid of that. So you can see that's the highs there. It's pressured down. We've got this major move back up, which we've spoken about many times when it was happening. Got the lower high come to place, so that level held. So if that's the case, there is the potential for that's your big move down. And if we just clone that, that's not what I wanted. All right, let's just delete that. It's not working out for me. Clone that. And we're looking, we could be looking for a major move down to sort of these zones, say around 11,600, which is another 1,200 points down from here at the least. I mean, if it gets a bit of a run on, yeah, okay, because you've got this is your leg down, break of that leg, we've got to move back up, and then with another leg down. So I'm expecting that to extend through these levels at 13,025. Okay, so that's what I'm looking for. This is the 4-hourly chart, so I'm looking for sort of your lower time frames. See if we get a bit of a bounce, hold that level. Any sort of pullback and it starts to hold as a lower high. That's where you're going to get your opportunity. Over to the Europe. This is the DAX. Now the DAX is opened up on the CFD anyway. Had a bit of a pop up, push down, so it's going to be under pressure. You've got some retest fail here at 14,155. That leg up is failing. Okay, I think it's just extended. I would be looking for that shoulder. Okay, that sort of lower high. Maybe we get a bit of a bounce and then something like that to work some shorts into. Now, if it comes screaming back, okay, so be it. That's what's going to happen. All right, but I'm expecting that kind of action. I think the market's going to get pressured now. It is a bit extended to the downside, so you probably just need to take some heat out of these sellers before you get your shoulder. And if it comes, like I said, comes straight back again, then you'd be looking for longer term, something like that. All right, but I'm I'm sort of feeling, I'm biased more of that shoulder. I think that's the first thing that's going to happen anyway. If it doesn't happen, then you're going to get a continued rally, whereas you might get the pullback and you can start to look for your high low. All right, UK. Now you can see that move, we've got lower high off there in that 75.96 area zone. Okay, this is your leg down. It's starting to get held up. We've got higher lows holding. It pressed all the way back up, squeezed some of these sellers. We've got this lower high, so it failed to get back up to 75.96. The good thing is it got through this kind of a level through 74.94, but this now failed, miserably through that zone. Okay, so whether we get some back and fill, a bit like the we're talking about the DAX, and you get something to work a short off there, I think that would be nice. I think we would get that's your first leg down, bit of back and fill, bit of a pullback to work a short into off a shoulder, and see if they can take us down through 73.39. Okay, so I think it's going to happen. We're going to get a choppy open in European markets, but then everyone's going to be sitting around waiting for what happens in the US again. Okay, in the US, naturally, a lot of people are going to be going bargain hunting on the open with the US because the Dow's down 900 to 1,000 points. The tech got smashed as well, a couple of percent, I think. So there will be people looking for, a bit of a bounce, which could easily happen on the open, a bit of a flush higher, dragging some buys, and then turn around and stomp on them again. Okay, if we go over to currencies now, we'll look at the US dollar. That to me, it wasn't really a major concern. There was some, because we did sell off into equity markets, there was a bit of some safe havens in towards these lows at 102.86. That to me looks like it could be starting to, you've got the retest fail here, double bottom, whatever you want to call it. It looks to me like it's starting to hold up. If we get any sort of fail to push down and we get a higher low, that's going to work back up to these highs, is what I would be looking for. Now, this is that major resistance zone at 103.500, 103.5, which it could mean that it sort of negates this little pattern here, this double bottom, and we might get another grind lower. But I would expect on the US dollar, don't expect too much until sort of Thursday. We might just chop around this area because Thursday there's going to be obviously expectations of a rate rise in the US, but then you've got FOMC talking, and they're going to talk up more aggressive stance towards inflation, meaning more aggressive stance towards rate rises, or whether they're like, okay, we're happy with it at the moment. And I think that's going to determine which way the US dollar is going to go initially. All right, over to the currencies. I haven't really set these up, but you've got the euro into some major lows, and we get that corrective action, like what we've seen at the US dollar. The US dollar's up into the highs. We've got some corrective action around these lows on the euro, so into that 105 area, 105.00 area, sort of this zone through here. Okay, we had a good leg down as the US dollar's rallied. US dollar's come into some resistance zone, meaning the euro's coming to some support, and we get sort of some back and fill of this leg. So we're trying to squeeze out some of these sellers at the moment. Okay, and we have broken the anchor. You can see this little anchor to the downtrend. We've got the previous anchor before that, about 105.72 thereabouts. We've broken that. So now whether we just continue to hold this area, we might flush there and then start to bounce back and get some sort of action on the upside we can play off. Otherwise, if this starts to roll over, there's no reason why you can't just do something like this and then it starts to hold. Okay, but that's dependent, to me, it's going to be dependent on largely on what the US dollar does. Okay, pound. The pound has pressed into these levels around that 125.08 or 125.10 area. It's flushed that level, bounced straight back again, and we're starting to break. That's the anchor to the downtrend is more of there. That's the downtrend anchor there. It's broken that. So whether we get some back and fill, a bit of corrective action of this leg down as well. That's what I'll be banking on at the moment. I wouldn't be looking for any serious move to the downside again. It needs to a bit of a pullback, corrective action, and then establish a lower high, maybe up into this zone here, maybe up into so that 126, 127 area through here. Okay, back up this resistance area anyway. Okay, Aussie dollar. Not looking so crash hot there. You can see it's more about sort of that 71.66 area here. And we've got RBA, like I said, tomorrow, out tomorrow. Expectations is a rate rise, which should find some strength into the Aussie, just buying so that for that yield. But the thing is, the US dollar is also expected to raise rates. Okay, which sort of offsets. You got expected. Generally, you're buying rates because of you're buying the currency because of higher rates, and both of them. So it's a bit of an offset. So at the moment, it's more it's way to the downside because obviously the US dollar is probably looking for more rate rises than the Aussie or the RBA. Right, so I'm sort of looking for, that's why you got this resistance zone sort of holding 71.66. we may flush down into that 70.15 area, but I would expect it to hold between those two levels, yeah, ahead of tomorrow. US yen. Now it's still that 130 area is that line in the sand. Now you can see that the market's testing the resolve of the BOJ, Bank of Japan. That's the level they highlighted. So I wouldn't expect it to get too out of hand on the upside, but the market's always going to do that. Keep as long as you've got these big institutions that have been long for a long time. There's no harm in them sort of testing the resolve, plugging it through 130, just looking for some liquidity, looking for the retail to start buying it because they're getting all excited. It's going to break through that 130 area, and then it comes back again, and they might try to test it again, get the lower high. But either way, it's sort of choppy around that 130 area, and I would expect that to sort of cap the bulk of the action on the upside anyway, until we get a bit of an unwind of those yen positions, those short yen positions. But for now, it's still, we've still got that trend is higher. Okay, you've got big, good controlled move higher, bit of sideways action, consolidation, bit of a flush of some of those longs before we got that ramp straight back up again as the US dollar's pressed into that 103 area. But for now, it's still, US dollar holds that resistance. There's no sort of buying maybe to support another move up into the US yen, because I do think that the US is at least going to hold maybe back off a bit, okay, which means probably some pressure back below that 130 area on the US yen. All right, we'll get over to gold now. Now gold, it found some buys initially off, these lows, this area here at 118.94, had a bit of a pop through that resistance zone. So that was your key sort of anchor level to the move down. That move down there, that's broken. So I'll be looking to see if this can hold. Ideally, I'd like to see if this zone can hold. Maybe we might get a bit deeper pullback of this leg down, but ultimately the longer term, that's your leg down off the highs. More on a daily basis, you've got consolidation, move sideways, flushed out some of these buys, bit of a pop up, and then we start to flush out the buys. Sorry, dragging some more, flushed it out. So I'm looking for that secondary leg down, which could take us easily to 18.23 or that area down there. Anyway, okay, so that's still on the cards. It just might be we're chopping around these lows as you get bulls still trying to support the market, and a bit of safe haven buying I would expect too. That may support the market, but as long as that US dollar holds, I don't expect too much safe haven into that because everyone's just waiting to see what the Fed does. All right, so if that's the case, don't expect too much, unless of course indices melt down. They melt down. There's going to be safe haven across the board, which is gold, maybe some bonds, US dollar, all that sort of thing. But for now, the US dollars, I would expect, like I said, holding 103, which would mean that it might be a bit of a grind down into gold. I mean, gold could easily flush down, no problem at all, and start attacking into these lows. But for now, I'm sort of expecting this zone to hold 1893, 1894. We'll see how that plays out. Over to oil. Now, oil, I haven't set up a chart. I should have done that. Sorry about that. We've had that press up into 108.30. Okay, press up into this high, and now we're getting some failure. Okay, so it's not a major level, but it is a level. You can see that's a leg up, held that. That's your anchor. Come back down, broke it, retested before we got all the way back down to 93. Back up, retested, failed, held this higher level, and now we're back. Okay, so this is your downtrend. It's broken, double bottom, higher low. So that's to me suggesting that this leg up is going to continue. Okay, we might just hold below this level. There could be some sellers just diving in here, expecting that to hold and get a lower high off it, but I would expect that's going to bring in some bids to try to support that level, and that's kind of what you're looking at, to support it in around here and see if it can press back up and through 108.30. Now, if it fails, we start to hold below this level, the lower high, we might get a bit of action like this, bit of a pop up, and then you'd be looking for something like that all the way back down again. We could end up back down at 93. Okay, so that's what I'll be looking at on oil. Let's get over to copper, and then we'll finish it off in some cryptos. Now, that's under pressure. We talked about this. It was just chopping around that 445.40 area. It looks like it's flushed through these highs, dragged in some buyers, eager buyers that thought it was going to pump up, and it's turned around and dumped on them. Okay, so that's, I guess, with the strength into the US dollar, it's still, I guess there's a lot of people thinking, all right, with equity markets starting to get hammered, US dollar is going to find some safe haven bid, which it did sort of pop up into the close, which would be negative for your copper prices and your commodities prices, which are denominated into US dollars, which would mean that you're going to get some more pressure into copper, as long as the US dollar holds, of course. holds these levels or finds another safe haven bid. So if there's another meltdown tonight, a bit of risk off into the equity markets, I would expect that US dollar to at least hold, maybe pressure up into 103 above, and that for copper to start to pressure lower into maybe 429.45 area. Okay, so that to me makes more sense. That's your leg down, your initial leg down. You got that sideways action we spoke about, and we got a secondary leg down on a bigger scale. We're on a 30-minute chart here, but I'm talking the daily charts, which would mean this is going to extend into that 429 area. Okay, in the short to medium term. All right, so that's it for copper. We'll get over to just some Bitcoin. I might have that on the other charts. Just 1 second there. No, I got rid of them. It was a smart move, wasn't it? All right, so Bitcoin, you can see it's pressuring down. It's reacting to the equity markets. This is your weekend action, but this was from the equity market sell-off, share market sell-off into the US, which was started somewhere around here, initial pop, and then that pressure down. The weekend action was sort of chopping around the lows. So they're opening around where they closed early hours of Saturday morning. So I would expect I would expect Bitcoin and Ethereum just to be sitting around waiting to see what happens in the US. Now, if the US has another sell-off tonight, I would expect these to get sold into as well. Okay, your currencies. Let's look at the bigger picture. I just want to see what's looking like on the daily. Yeah, honestly, it's not looking too crash hot. You've got a level here which would need to hold 37,720. Otherwise, you're looking back down to sort of that 30,000 area. Okay, that's your big push up. Pull back, held, okay, nicely on the daily, pressed up through the highs into new all-time highs at 64,000. The bulls be, chasing their tail trying to get in, and they got dumped on. Okay, so that to me is a big RTF, major double top. With this miner, because if it's not going to get through convincingly, you got initial pop through the highs, pull back below, had another attempt, and fell away convincingly. Okay, below. So that to me is a double top. Double top. We haven't really held a key lower high yet, which could be what we're forming here. Okay, if this becomes a lower high, that market's going to pressure lower. It could even just get smashed through 30,000. Okay, so bear that in mind. That longer term uptrend hasn't broken, but there's been more than enough levels broken where you're either going to consolidate sideways or you're going to get a sell-off. All right, so for now, my money's away from more bullish action, especially if it's following the US equity market and get a big sell-off. Now everyone's spruiking Bitcoin, higher levels, bargain hunting down here. Doesn't mean anything. Okay. Just play what the action's telling you. Now into Ethereum on a daily basis, you got similar kind of action. Let's just draw a couple of levels up here. Here we go, found it. So you've got similar kind of thing, major failure at the highs. You've got that's your low you're gonna be concerned about. If that starts to break, now it's just sort of these inside levels where the market's failing. Okay, failed through here, come back up and retest, and we're getting failure again. So if we start to fail through these zones, something through here, that's a major lower high, and that could be that at the very least, that's your extension leg. If we just clone that, got the right one, got the wrong one, clone that there, working off there, we're going to break through that 18 or 1788 zone and really start to pressure back down into these lows. So maybe the good days are over. I don't know just yet. Okay, but that's what the bulls will be a bit concerned about. All right, that's all I want to talk about at the moment, guys. We'll see how that goes, see how everything plays out today. And remember, stay safe. It could be a choppy open. I would expect it to be a very choppy open. A lot of volatility on the open. We'll see if the market, the last time there was a big sell-off in the US, our market was expected to open very weak. It opened not quite as weak as expected and had a bit of a bounce. So whether we do that again today and everyone's seen it as a buying opportunity, I don't know. We are going to interest rate cycle, which sort of crimps returns, which will crimp, if share prices if they are overvalued, I would expect that people are going to be a bit nervous about diving into them left, right, and centre. But either way, know where your risk is. I think it's most important today. And then keep an eye on your major levels on your indices and just what the global market's doing, because when everything's in a bullish action, it's easy just to get focused on share prices because everything's going up. But when things start to melt down, you've got your ETFs going to be selling into the market. They don't care what your prices are. If they have to unwind everyone, remember there's been a big push into ETFs, exchange traded funds. Everyone just bought them, didn't care about the underlying share prices. So if it's the STW, I think it's a 50, top 50 stocks or whatever it is, they just buy them randomly as everyone's buying into the STW. They're not concerned about the underlying stocks. They're just buying that as in the next trade as a fund.
They just go up, they come down the same way. They don't care about each individual share price. They're not trying to get a better price on each individual stock because as a whole, they're trying to sell. Okay, so if that becomes what happens on the downside, things could really start to get a bit of a run on. So just know exactly where your risk is, and that's why it's important to look at your bigger indices, because if everything starts going down together, they just get hammered across the board, and it could be a big unwind of margin positions. Okay, so when that starts to happen, no one cares about what prices they're at. You're not trying to get that better price. Whereas when it's an orderly market in an uptrend, a bit of a sell-off in an uptrend, yeah, it's a bit different. All right, guys, thank you very much for joining me, and we'll speak to you again tomorrow. See how we go today. Cheers. Bye.